and I'll share my screen. Do that, share, and we will start. All right, does everybody see my screen?
It's loading. There we go.
Awesome. Let's see if I can get the slideshow to load up. All righty. So, y'all, welcome to the first of many VA Loan Lunch and Learn class. So the purpose of this call is education only. This is not a request or solicitation of business. I am not a licensed loan officer, just for some more disclosures. If you do have any personal loan questions or information that you're needing, please reach out to a trusted loan professional. Any real estate professional on this call that is seen violating any of the above rules, i.e. soliciting for business, I will be asking you to leave, and you'll get one strike. And then if you come back and do it again, you're gone for good. So this is a purely education only. And the reason for that is because we know a lot of veterans, they get completely bombarded with direct messages and all kinds of stuff when they jump on things like this. And so they're less likely to do so. So this is just going to be a 100% education only environment. So as long as we're all good on that, keep going. Let me see everyone's cool. All right, so just some general things. The purpose of the VA loan, now it's not the official purpose. There's really no official purpose of it, but it's basically to give every man, women, and every man and woman that serves this country the lowest barrier to entry of owning a piece of it. And why do I say lowest barrier to entry? The reason for that is because one of the biggest barriers to entry of buying a home is the down payment. It just is. And the VA loan, while not being a completely $0 out-of-pocket loan product, because there are closing costs involved, it takes away that really huge barrier to entry. And so it's just one of the and because of that, it's one of the best benefits that we earn serving our country. So I just think more conversations like this need to be happening. Between 13 and 33%, I'm not sure what stat you want to go by, have actually used their VA loan in the veteran community. And let's just say on the good side, that's 33% of the veterans in this country have used their VA loan. Well, that means that 67% don't use it, and that half of that 67% doesn't even know it exists. And the half that does know it exists never intends to use it because of bad information. And those are the two numbers right there that really get at me, because that's our fault. That's our fault as a real estate professional community. And if you just do the math, about 200,000 veterans get out of the military every year. And so that means that 67,000 veterans are not buying a home that should every year. And that just really kills me, because veterans deserve to own a piece of this country that they signed up to protect. And so anyways, more conversations like this are going to change that. And so that's why we're doing it, and that's why we're going to continue to do it. So today's topic, what we wanted to go over was qualification, eligibility, and entitlement. And there are three different things. A lot of times qualification and eligibility are, misconstrued. And then entitlement is my favorite one. So we're going to spend a lot of time on that. So first, what do they mean exactly? So qualification, as it pertains to the VA loan, refers to the veteran's ability to afford a mortgage payment, therefore qualify for the mortgage. So we'll get into it a little more on the next slide. The lenders do the overlays when it comes to qualifying. The VA really doesn't have a whole lot when it comes to what a veteran should qualify for. It's all up to the lender. Actually, one of the best things that the VA loan ever did is stay out of that. They let the lenders do their work, and that's how veterans are able to get a really good product with it. Eligibility, a veteran is eligible for the VA loan if they have met the minimum required service standards set forth by the VA. We'll get into that in the next slide. And the last one is entitlement. Basically, entitlement is the amount of zero down buying power a veteran has through the VA loan. And like I always say, it's what makes it one of the best benefits that veterans earn serving this country. So qualification. And actually, before we start on this, I want to talk about two different types. Actually, let's talk about three different types of income that most veterans have. Number one, good but undocumented income, because a lot of us get out, we start our own business, and we don't want to pay taxes. And so we take every tax write-off that we can. And so while you may show on your bank statement that you're bringing in 10 grand a month, according to your W-2 and the IRS, you're losing money every year. So what I call that good income, but not documented income. So what you need to do is talk with that person and say, hey, look, we got to go back and redo some tax returns and get you qualified. And then, hey, when this loan closes, do whatever you want, but you got to show income. The second is just good income. So what's considered good income, especially for the VA, is going to be solid W-2 income, about 2 years of steady income, no drops in, employment and things like that. So basically, if you are a, salaried employee making about 80, 90,000 a year consistently, that is a easy loan to close on because of your income. And the last is just bad income. And what bad income is unstable. A lot of times veterans do have trouble with keeping a job. And so in that situation, we would want to make sure we're getting this veteran on track and get some steady income and things like that. So as far as qualification standards go, the VA doesn't set a minimum credit score. Other banks and other lenders do. My basic recommendation is a 620 or better. And the reason why I say a 620 or better is because at around 620, you're pretty solid. You've got some debt, but your life's in order. Let's be honest, that if your score is down in the 500s, 520, you probably need to be taking care of a couple of other things before you buy a home. And so that's when it's our jobs as professionals to get them on a path of getting that credit score where it needs to be and get them in the right situation. But however, not every situation is created equal, because you could have a veteran that just doesn't have any credit, but they have great income. So through whether it be retirement or service connected rating payments and whatnot. And so for a veteran that has like really great income and no debt, just because they don't have credit, well, we know they can afford it. So then it's time to have the conversation with a loan officer that can go a little bit below that, normal 620 or 580 is usually the lowest I've ever seen threshold. And there are several. As far as income verification goes, that's the next thing about qualifying. We kind of talked about the different types of money, different types of income. 41% is the front end for automated approval as far as DTI goes. However, what makes the VA loan unique to all other loan programs is they use a different standard when it comes to deciding if a veteran can afford to pay the mortgage, called residual income. And that's based on a chart. It's in different geographical locations and how big your family is or how big the veteran's family is. But basically, if they have X amount of dollars left over at the end of the month, they qualify for the mortgage at that price. This allows veterans to go much higher than 41%. I've closed veteran loans that are 55, 60% DTI because they have the residual income. And the reason for that is because the VA loan basically is the veteran telling a story. And so if they have other methods of paying for a mortgage, then the VA loan or the VA is going to let them buy a home. So again, income is considered verified at 2 years. However, less than 2 years, income can still be used with a letter of explanation. When it comes to the VA loan, there is basically a letter of explanation for everything. For instance, when you have a gap of income of 3 months or so, if you can explain as a veteran, hey, I was going through some rough times, I quit my job, but now I'm back and now I'm solid. It's the same industry, blah, 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 blah. The VA will, the underwriters will overlook that. Another thing about overtime in the second job. So the second job just has to be, like, for instance, let's say it's a seasonal job. They just have to consistently work every December in order to use that income to qualify as well. It can't be like I worked one Christmas year and then did not on the next year and then you did on the year prior. You just got to show some consistency. I know I used a secondary job income for my first purchase, and it was because I worked 7 years straight football seasons here in College Station. And so that's just for an idea of what they need, what a veteran would need as far as qualifying and verifiable income. And the last little bullet point on there is tax-free income gets grossed up 25%. And so the reason why that's important is because, number one, active duty military have access to tax-free income in the form of BAH. And that is good tax-free money that should absolutely be going into their pocket versus into somebody else's, or even worse, the government's, by putting them on base housing. And as far as the veteran community goes, we have a substantial amount of veterans with service-connected ratings at this point because we've been at war for like 30 years. And so they have really, really good tax-free income that gets grossed up. And like we were talking about, that good documented income, there's nothing better than service-connected rating payment when it comes to that good documented tax-free income. So that's qualification in a nutshell. It's basically if the veteran can afford to pay the loan, they're qualified. So let's move on to eligibility, because that's, like I said, a lot of veterans think that just because they're qualified that they're eligible, or they think that because they're eligible that they're qualified. So anyways, eligibility. Basically, every veteran gets issued a certificate of eligibility, COE, or we call it the golden ticket. It basically says black and white whether or not a veteran is eligible for the VA loan. It's going to list everything from how many times they've used their VA loan in the past to if they have a service-connected rating and even their discharge that they received. And the loan officer can pull it up with ease. The veteran can do it themselves, but loan officers, don't be lazy. Go ahead and pull the COE. You know how to do it. All right, so there's a lot of data on here. So we'll just start over on the active duty service requirement. And then there's a little chart in the bottom left. The VA considers wartime and peacetime, two different service requirements. And because of that, which basically we've been at war since 1990, according to this chart. So you're not going to run into a lot that are at peacetime, but we'll still talk about it. So basically, active duty service requirements, if you have served 90 days after boot camp, it has to be after boot camp in wartime, or 181 days in peacetime, you are qualified or you are eligible to use the VA loan. And this is both for active duty and veterans, because you'd be surprised how many veterans you can come across that just assume because, I only served 2 years and I got hurt, or I only served 2 years and I had to get out because of X, Y, or Z. If you serve that 90 days in wartime, and as long as your discharge isn't a bad conduct, no big chicken dinners, you qualify for a VA loan. And so that's a lot of, like I said, I've ran across several veterans that just don't even think they qualify. And the same applies for active duty. As soon as you get that 90-day mark on active duty, now, not all MOSs are created equal, and I would not recommend a certain MOS to go try and use their VA loan 90 days after boot camp. But technically speaking, you are eligible. As far as, like I mentioned, the discharge. Okay, so basically anything above, other than honorable condition and above. So you've got your honorable discharge, you've got your general discharge under honorable conditions, you've got your general discharge under other than honorable conditions, and that pretty much is the cutoff. However, there are different caveats to even a bad conduct discharge being approved. If you come across a veteran with a bad conduct discharge, just kind of get their story, get it up to the VA, the Regional Loan Center, and they'll say yes or no. Another thing is that's happening more recently. Let's be honest, a lot of people got kicked out for smoking a little pot here and there, right? Well, guess what's becoming legal all across the country? So a lot of people are able to get their discharge upgraded because of new laws and regulations. And so, again, just whatever your thoughts are on it, if this veteran still earned this benefit, it's up to us to get that information to them. And the last little thing on that is that if you served 1 day and you broke your leg and they kicked you out, then you qualify as well. So basically, if you have a service-connected reason for being discharged. So reserve service requirements, and this is another one that reservists just automatically think that they don't have access to it. And this goes for National Guard as well. It's based on a point system, but the general rule of thumb is 6 years of pure reserve service. If you have never been activated, you qualify for the VA loan. Now, if a reservist was active at any point for the same period of 90 days in wartime or 181 days in peacetime, they fall under the active duty eligibility requirements. And inactive duty does not count. But yeah, again, a lot of reservists really just think that they don't qualify for it, and they actually do. So it's a benefit they earn. So let's get it over to them. And as far as surviving spouses go, so an unmarried surviving spouse, if the spouse passed away due to like actual service, meaning died overseas, or service-connected reason. So let's say they have a 20%, let's say they have a 20% PTSD rating, and so unfortunately something happens and they end up taking their own life. Well, that is considered a service-connected rating, so that surviving spouse would have access to the VA loan. Caveat to that is they can't remarry until the age of 57. I'm not sure why the VA has stated 57. I guess they just think, she's old enough, let her move on, you know. But as well as, so if an active duty is KIA or PO or a POW for 90 days, again, I don't know why they picked 90 days on that. That active duty or that spouse also has access to it. The last little section on there is, so if a veteran passes away with a 100% service connected rating, and they had the rating for 10 years before they pass away, no matter why their passing occurred, their spouse has access, is eligible for the VA loan. That's really important because we do have a lot of veterans that are 100% service connected, and in the event that they pass, that benefit gets transferred over to their wife. Same thing for if you have a 100% service connected rating from the day you get out of the military and up to 5 years. Sorry, not up to 5 years. You have to have it 4 or 5 years from the day you get out of the military, and you pass away. Again, your spouse is eligible for it. And if you were ever a POW or MIA and you had a 100% service connected rating 1 full year prior to your death, then your spouse is also eligible for it. So, kind of said a lot there. Normally, this would probably be where I would open it up to a little Q&A, but Brent, if you're cool with me just moving on. Cool. All righty. Now let's get to entitlement. Again, this is one of my favorite things to talk about. I could probably talk about entitlement for hours, but we're already about done. We got 10 more minutes, so we'll just move on through it. So entitlement is basically, it's the meat and potatoes of the VA loan. It's what makes the VA loan the most valuable benefit veterans and active duty servicemen and women earn serving this country. Eligible veterans and active service members entitlement is what allows us and them to purchase a home at zero down. And it's right here. And like I said, it really is what makes it one of the best benefits that we earn. It's what the VA loan is all about. So what entitlement really is so a lot of people, a lot of veterans, a lot of even real estate professionals think that the VA is the one that issues the mortgage. They're not. They just guarantee the mortgage to the lender at 25%. So this 25% guarantee makes it so that if the veteran or the user buyer would default, the lender will be made whole at 25%. They can foreclose on the home, sell it, and make some money. That's why lenders like using VA loans, and that's why VA loans get much better interest rates than conventional, et cetera. And there's also a little stigma out there that if compared to a 20% down conventional offer, a VA loan offer is not as strong. Well, if you think about it in this way, that VA loan offer is actually a 25% down offer because the federal government, the VA, is backing that up, just as if that person putting 20% down has cash, this veteran has entitlement. So always consider that when presenting offers to both sellers, and whenever you are putting an offer in for your veteran client buyer, make sure you point that out, because a lot of times they will be looked at as a inferior loan product, and it shouldn't. So like I said, long story short, if a buyer buys a $400,000 home, they now used up $100,000 of their entitlement. And we'll get more into using up entitlement and what that means on the next slide. But a couple little things here. The entitlement stays attached to the property until the mortgage is paid off and or ownership of the property changes hands. And now that line's important because I didn't say paid off, period. If a mortgage is paid off completely, but it has not changed ownership, the veteran's entitlement is still tied up into that property. They have to pay it off, have it change ownership, and then their entitlement will automatically be restored. Now, there's other ways of doing it. We'll get into that later on. It's called a one-time restoration, but for the most part, the only way to remove your entitlement is to swap out another veteran's entitlement for yours, or pay off the loan and move on to the next property. So I think I have a note down there. Yeah. So even if property is paid off in full, if ownership does not change hands, entitlement is still attached to the property unless restoration of entitlement was initiated. So, and the last little one there is, like I said, this is basic entitlement. If your veteran client's only buying one property, they have essentially unlimited entitlement for your first property, meaning there's no limit on what a veteran can borrow for at zero down. It just depends on what they qualify for. Now, when you move on to the bonus entitlement and multiple properties, that is where we have to start factoring in some things. So, second tier or bonus entitlement. And this is what really, really makes the VA loan a game changer and a wealth building tool for the veteran community. So bonus entitlement is what allows an eligible veteran and active duty service member to buy both a home at virtually any price for zero down, as well as use the VA loan to buy multiple properties and keep them. So the way it worked is when the VA loan was established, it was in 1948, and they only allowed the veteran to buy a up to $144,000 home. Now, that was probably a lot of home back then. Clearly, it's not the case anymore. The problem with the VA loan is it's basically it takes an act of Congress in order to change the verbiage. So instead of trying to ram stuff through Congress every year and increase the amount that a veteran can borrow, they came up with this idea of bonus entitlement. And they tied it to the county conforming loan limits of each specific county that their veteran lives in. So basically, when we talk about entitlement, the buyer has up to 25% of whatever area they're moving into, their county conforming loan limit or CCLL, and that is considered their entitlement. So for the most part, the next, we'll go to the next one down. For the most part, the county conforming loan limit for everywhere is $500 for this year. So long story short, they have from, if they want to buy multiple properties, they have from zero to $806,500 in zero down buying power. As long as all the mortgages combined are under that amount, they can still use their VA loan multiple times. And I always like to go back and forth from this 25% to like the actual purchasing price, because there's two different things. Entitlement is 25%, but purchasing power obviously is 4 times that 25%. And the reason why is because it's good to have an idea of both, but it's easier just to go by the county conforming loan limit. So quick math, veteran buys a home at $300,000 in 2018 and wants to buy a bigger home. Standard CCLL for 2025 is $806,500. So therefore the veteran has $506,500 of zero down buying power for the next purchase. So, and that doesn't have to be all at once. They can do multiple homes. And again, as long as all the combined mortgages fall under that amount. Now, anything over that amount, the veteran can still buy, but they have to put down 25% of the difference of the purchase price and their remaining entitlement. And so what that looks like, let's say that veteran wanted to buy a $526,500 home. Well, now all they have to do is put down $5,000 to cover their portion of that 25%, because the VA is only going to guarantee up to a certain amount. And so that's why I always like to make sure we understand that 25% entitlement versus purchase price total amount, because anything over that purchase price total amount is just a 25% down payment, and $5,000 for a $526,000 home, not bad. So, and the last little slide here on entitlement. So like I mentioned before, there is a method called the one-time restoration of entitlement that a veteran can use that has maxed out their entitlement. And what that looks like is they refinance whichever property they want. They have to pick one property. They can't do multiple. They refinance it to a conventional mortgage, and then they do this one-time restoration. And then they now have an additional level of entitlement. Like let's say the first home, let's say the second home was a $500,000 home, and they refinance that one to conventional, and they keep it and they buy the next one. Well, then they're going to have an extra $500,000 basically of entitlement that they can use now at this point. So if they only used up 300, now they have $506,500 of zero down buying power again. So, and as people are going through like various stages of their lives, that can make sense. So if a veteran is like 55, 60, and their kids have moved out and they need to downsize, well, maybe they can easily find a home in that price range. You don't always have to go up in price, So another thing about entitlement is the county conforming loan limits vary as you go into more high cost areas. And so a great example of this is a veteran. Let's say he buys a home at $300,000 and he buys another home at $506,500. So theoretically, his entitlement is wrapped up. He's done. Well, let's say he PCSs. So this is active duty, but let's say the veteran moves to a state like California where the county conforming loan limit is upwards of 1.3 million. Well, now that veteran has the opportunity to buy a third home at zero down of the difference between the first amount of entitlement that he used up to the new county conforming loan limit where he's at. So it's a really good way, especially I know I mentioned active duty. It's actually a really good way for active duty service members to build that real estate portfolio as the government moves them from duty station to duty station. If you could end up your last duty station is in one of those high cost areas, you can really come up with a sweet real estate portfolio across the country. And by the time you retire, like not only are you getting your retirement, not only are you getting your service connected rating if you earned it, but you've got a really nice real estate portfolio. And the county conforming loan limits are consistently increasing year over year. So what that means is, let's say you're done buying properties at age 30. Well, then all of a sudden you turn 60 and your kids moved out and it's time to downsize. Well, but in that 30 years, chances are the county conforming loan limit in your area has gone up dramatically. So you may have access to a third property because of that alone. It just depends on what you want to buy and what your situation looks like. Last little bullet point on there is entitlement assumption. So all VA loans are assumable. It's a very lengthy process to do it. It's very popular now with a lot of veterans having like a 2.93% interest rate, and they want to sell their property to another person. And instead of the other veteran coming in and having to get a 6.5-7% mortgage or interest rate mortgage, they can just assume the veteran's previous mortgage. And the caveat is they have to come up with cash to cover the difference because the VA will not let them take out a second lien position. But sometimes, especially if you're around these military bases, you'd be surprised how much cash these guys have when they come off deployment and things like that. So it's always out there. And I know it's very enticing, but you are allowed technically to let a non-veteran assume that mortgage. However, your entitlement is tied up into that property if you do that. And so if that non-veteran were to default, then you would have to make the VA whole again. And so it's just not encouraged to no veteran to non-veteran assumptions. Veteran to veteran is okay. It takes a little while, but still we frown upon it when it's veteran to non-veteran. And yeah, I think I kind of went through that pretty quick, but we were right at 30 minutes. So anybody got any questions?
Kevin, I appreciate you putting that together, man. That's incredibly comprehensive, a great walkthrough for somebody who's not necessarily familiar with the package. It's really, really well put together.
Yeah, and I'll send you the slide deck where you can look it all over. I know I kind of burned through it pretty quick, but yeah, I mean the whole point is like even if we can just have like one or two better conversations when a veteran comes up to us and says, "Hey, I want to use my VA loan," we're probably going to move that needle just a little bit more and a little bit more, and eventually that number will be 50% of the veterans own homes, and hopefully more and more and more. And, to the point where we're not going to solve the veteran homelessness crisis overnight. But I mean, it's conversations like this. If we don't let veterans become homeless to begin with, I think we have a very solid chance of putting a dent in that number, in that veteran homelessness statistic that we're dealing with right now. So, all right. That's all I got, man. I appreciate it.
Appreciate you, brother.
Be good, man. See you in Scottsdale.
Damn right, sir.
Later. Rock Hill Simper and all that good stuff.
Yeah. Green, broad grass. Yeah.